And we're back for another weekly update. I'm here with Gary. Gary's down in Texas. I'm here in California. It is Monday, September 29th. Almost
Yes,
into
sir.
spooky season.
Yeah, you got to get your Halloween stuff
The
ready.
decorations are out. My son's going to be a hot dog. He wants me to be ketchup. That's where my life is. Moving up in the
Just a
world, Gary.
big bottle of Heinz.
Big old bottle of Heinz, baby.
Yeah. If for anything else, that's should motivate folks to hit that subscribe button.
Yeah.
I mean, just to
If we
see
get enough,
in the
I will do the Monday update after Halloween in said Heinz ketchup bottle costume. I mean, I don't know how to.
I'm going to tune in for that.
Yeah,
I'm going to tune in for that.
That should create some stickiness.
Yeah, man.
All right, what's going on? We got a week.
Lots.
We got some news in the government. We got a lot of stuff. What's the word? Where you want to start?
Well, I think looking back, the Fed made their cut about a week and a half ago. So rates have been kind of a steady range, a little bit up from that day, but overall we're still seeing in that low sixes, mid sixes, 6.5% from a rate perspective. But I think the big news, like you alluded to this week, is tomorrow deadline for the government shutdown. That's going to impact a lot of things, particularly the reporting that we get, that the government gets to, basically Fed policy, so like these jobs numbers, that's a coin toss on if that's going to happen. So who knows how that's going to impact us. I did some research though earlier, and it looked like previously when there were government shutdowns, you saw a decline in rates just because investors are going to safer, air quote investments. Obviously, treasury bonds yields would be impacted by that. So we could see, hopefully they'll come to a sensible agreement. And I know that's a stretch for Washington, D.C., but I think that's the big concern this week is shutdown. And then later in the week, we've got some jobs numbers to look at as well.
So one of the questions since the rate reduction announcement that I've been getting is, why did we see rates bump back up right after the announcement? I think people think that the rate adjustment directly correlates to which direction mortgage rates go.
Yeah, it's a tricky deal. What we started seeing was about once the market really felt like there was going to be a rate cut on the 17th, 18th, 19th, whatever that was, the market, our side, started baking that in. So we saw about a 25 basis point drop on our side. But then once the rate was actually cut, then you see that tick upwards. And it didn't go up a lot. It may be 10 basis points from the time they cut. Again, we go in the opposite direction of the Fed funding rate. So think back to when inflation went through the roof, right? Mm-hmm. The Fed started raising rates to try to catch up with that. And so our rates, obviously followed inflation. So as we're seeing inflation go down, we start coming down a little bit, but now we're kind of in that range. So it really wasn't, rates went up a lot. It was hundreds of dollars, not like you went from a 6.25 to 6.75 kind of thing. So,
yeah, I think it's interesting. People are getting caught up in that, and we still have a lot of conversations with people just waiting on the sidelines. And, realtors I speak with, buyers are still hesitant to jump in. I don't think that's as rate driven as it was, but it definitely is a concern that I know a lot of local realtors here are feeling, that buyers are just, hey, I'm going to wait and just see how things play out. More economy related than rate driven, but certainly top of mind for buyers now.
Yeah. I think jobs, I think employment is a big concern for folks. I think they're concerned, we're coming into Q4, which is a lot of big corporations do a lot of, we've seen it down here in Texas, oil and gas companies are already starting to slash jobs. And so I think that is the big kind of concern, the fear, hey, do I have job security going into this season? And so, a lot of moving parts going on still, like I said, we got the government trying to get the spending under control. That's the big fight right now on Capitol Hill to get this, to fund the government till at least the next deadline. And so we've got that going on. We're still seeing, we saw inflation come in last week as expected. moderate inflation, nothing extraordinarily alarming by any stretch. So that's the good thing. It looks like those tariffs aren't as impactful to an inflation number as I would say one side of the coin was alluding might happen.
Yeah,
So
utter
here,
devastation from an inflation standpoint. It hasn't really happened yet.
no, it hasn't. And so it's good because the upside is that's revenue, right? And so we're offsetting deficit. Obviously, it's not like you can just go ahead and wipe out 30 whatever $6 trillion or whatever it is. But, at least we're not adding to it. Well, we are, but not at the same pace.
Right.
As we
offset
have
some
the
of
last, yeah. So, those are the good things. So I think, as far as mortgage is concerned, like you alluded to earlier is, hey, let's get your mortgage plan in place. Whether you're planning, refi in the future, thinking about purchasing, the sooner we get working on that and have you a good plan in place, you're going to be in a lot more flexible position once you decide, hey, it's a good time for me to refinance, or it's, I'm ready to start shopping for a new house. That way we've got everything and make it a
we
smooth,
can just
easy
jump
process.
on, know where you want to be, what the goal is, have a discussion about when we think we might achieve that rate level, and then we're ripe to pull the trigger. But if we have to start from square one when the rates hit that number, it takes some time to get through all this. So yeah, I agree. Get in early, and also still a very, with rates where they are today, still if you're sitting on outstanding debt, high interest debt, cash out refis looking more and more attractive every week.
Yep.
So take advantage of that. We've got great home equity products. So if you're looking to do that, now's the time to get the ball rolling and start talking with your loan officer. All right,
Absolutely.
Gary. Well, thanks for the update.
Yeah.
We will be back next week, not with my ketchup costume because that's too early, but I'm still going to leave that out there that it could happen.
We'll all be waiting
with bated breath. I know. I will make sure I have it ironed so it's not wrinkly and you can see the Heinz logo clear as day.
Good deal.
All right, everybody. Thanks for tuning in for this weekly update. Have a great week, Gary. We'll talk to you again next Monday.
See ya.
See ya.